Hi, this is Kerry Artag with Artag Advisory, and this is the AgriTalk video supplement for Monday's show, October 4th, in which I cover three markets: November crude, November heating oil, and November feeder cattle. With regard to crude, the long-awaited, not necessarily anticipated buy signal played out last week. For the first time, I'm going to zoom in here. For the first time since early last summer, when we tested this channel top, then in the 76 handle back in June and July, we tested it, we pushed through it. We never settled above it at the end of any week by a 1% violation threshold, but we did so last week, and already Monday we've got follow through to the upside, now anticipating that 93.03 to 94.48 region, which is a combination longer term channel top and descending two-thirds speed line, taking into account the 2008 high against the 2020 low. So that upper area is trend defining longer term. I consider it a 3 to 5 month objective, which puts us into Q1 2022, during which time at some point I would expect to test that area. There are little thresholds on the way up. Little secondary buy signals I'm not going to get into. This is sort of the basic snapshot. 74.48, our base of support, dropping a little bit every week. Good area to buy into on a pullback, and above which the lower 90s are anticipated over the next 3 to 5 months. Now, if we close the week Friday back below 74.48 November crude, that is a failed long-term buy signal that should at least yield bearish retracement back into the low 60s again over the next 3 to 5 weeks, and we could continue all the way back into the upper 50s over the next few months. I imagine I'll apprise you of the update on those targets if we close the week below 74.48. But if we don't, just know 3 to 5 month target into the low 90s a barrel anticipated for West Texas Intermediate. Before I jump into heating oil, I just want to encourage you. You're probably at the website right now watching this video. Please click on the free trial button. I would love for you to take my work for a 2-week test drive. I don't follow up with all kinds of annoying sales calls. I keep it pretty low key. It's very professional. You fill out that free trial form, your first name, last name, email address, and preferably a phone number. I'll get the work off to you immediately for 2 weeks, everything that I do unfettered, and you'll get a call from me. We'll talk the markets, see what the markets you trade, what your background is with regard to the futures markets, and at the end of the 2 weeks, I've basically called to see if you're interested in becoming a regular monthly subscriber. Let's go on to heating oil. That also, as you might imagine, posted a buy signal last week. That was the first time that this formation had been violated. It has actually been a target since last November. If you've been listening to the show, you listened to the periodic heating oil commentary that I put out. We did have a meaningful buy signal last February in which I was anticipating the 2.3223 channel top. Well, we didn't spend much time testing it. We pushed through, settled above last week by a full 1% margin. Bear in mind, these are all weekly bar charts. So now a 3 to 5 month buy signal is in play up to the 2.9260 region. And I think that's pretty realistic. Could we get up there in a month or two? Perhaps. But I think 3 to 5 months is realistic. Like crude oil, there are other meaningful thresholds on the way up I could mention. But the purpose of this is just big picture. Floor of support, 2.3223, able to absorb selling through the rest of the year, and above which a 3 to 5 month buy signal remains intact up to the 2.9260 formation, which is changing, dropping ever so gradually every week. Now, if we close the week Friday back below 2.3223, guess what? Just like crude, in fact, I would expect both markets, if crude is to close, the week Friday back below 74.48, which I showed you in the previous slide, I'm guessing heating oil would also close below 2.3223. As far as heating oil goes, I think you've got the lower 190s, 1.92 to 1.94, than anticipated within a month or two. But over time, into later winter, spring, we could fall all the way back into the 1.3s perhaps. That would be kind of a 3 to 5 month possibility if we settle the week back below 2.3223. But until then, all systems go to the upside the next 3 to 5 months, anticipating 2.9260. Now, finally, feeder cattle. This is kind of an update. I've been talking feeder cattle quite a bit. I mention every few shows I've been talking feeder cattle since last summer. We put out a long-term buy signal in June above that horizontal channel top that's dropping ever so slightly this week at 152.92. Now remember, this is the November contract. There's also a rising speed line this week that is trend defining, projected off that 2020 COVID low at 153.42. This is a half-point range of support. We're in the midst of testing that can absorb selling, I'm going to say through next year perhaps, because the consequences of this longer term are quite bullish. Now, we mustered a rally in July and into August and came falling back aggressively, and here we are. This is a significant pivot point into next year. I'll give you a buy signal and what we might expect for the November contract into later October if we get some upside gains above key levels in a moment. But I'm going to leave this big picture image with you that if we close the week Friday below 152.92 by a 1% margin, I'm going to give that to you audially here, times 152.92 would be 151.40. 151.40. I'm not going to put it on the screen in post-editing. Just know that if you're listening, 151.40 is a 1% break below 152.92. In other words, if we close the week Friday 151.40 or lower, which is a 1% break below 152.92, we have what I would consider to be a failed long-term buy signal. This, in essence, should result in continued heavy trade as we move into winter. There are support levels on the way down in the 145, 137 handles I could show, but really I want to leave you with the fact that I think over the following 3 to 5 months, which would put us into later winter, we should continue south to that 128.57 rising 2/3 speed line, which can, by that point in time, absorb selling into next summer. So closing below 152.92 by the 1% margin, in other words, 151.40 or lower on Friday, is a longer-term sign of weakness. The upper 120s anticipated by the end of winter. Until then, this is bottom-picking territory, believe it or not. And unless we close the week at 151.40 or lower, this market can stabilize and turn higher. Here is the November data weekly chart only. This is the November contract converted into weekly bar chart form rather than daily bar chart. You can see 152.92 is represented there as a horizontal line. And in my opinion, just merely closing above last week's high at 158.35, so long as that low is not violated. In other words, the low this week is 152 even. And so, if we break that low, then the high of the low is no longer good, as you might imagine. So if you're looking at this chart, as long as 152 even is not tested or retested this week, and say we hold above 152.92, then that 158.35 as a possible buy signal into later October remains valid. This is very simple bar chart analytics. You can do the same on candlestick, but in my book, from what I've seen historically, it's not 100%, of course, but there's a very good chance that if we muster a rally this week and close above 158.35, the high of that move low, then the market should then recover into later October and even into November expiration. And then we have a fighting chance, perhaps, over the following 3 to 5 weeks by November expiration, perhaps, of pushing into the 174 handle. That 174.55 is the level that, if tested by November expiration, can readily absorb buying through the balance of November contract life. And I think it becomes, I don't know if we would reach it or not. There's a lot going on in the upper 160s and low 170s in terms of resistance, but just know that closing the week above 158.35, there is the possibility of 174.55 by November expiration. This given the fact that we are in the midst of testing long-term support, and above which a long-term buy signal remains firmly intact for the broader feeder cattle market. And that's all I've got to say for this week's AgriTalk video supplement for Monday, October 4th.
So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You have nothing to lose, and much to gain.